the landscape is totally different now. I mean, back then, companies were on a chase to get to 100 million ARR, and that meant if you do that, you can IPO. And now we're in a totally different world now. And so like, what is a IPO ready company? And then more importantly, what is a IPO ready and can be successful beyond that is the more important thread to pull there too.
Welcome to the Spark of Ages podcast. Today we're joined by Jeff Perry, the Chief Revenue Officer at Carta, whose journey from processing paper stock certificates in the most analog way possible to leading one of the fintech's biggest hypergrowth stories is an absolutely wild story. Jeff is a proven revenue superstar whose career journey spans decades across large enterprise software giants like Oracle and high-growth SaaS startups like DocuSign. He is recognized as an iconic revenue leader who knows how to build sophisticated revenue machines that scale with purpose. Under his leadership as CRO at Carta, Jeff has orchestrated a phase of intense hypergrowth, scaling Carta's annual recurring revenue from approximately $20 million ARR to a remarkable $450 million ARR. That's a 22x increase while managing everything from new business and upsell to customer success across Carta's multiple business lines. Jeff attended Santa Clara University, where he received a BS in political science and where he also played NCAA baseball. And you can see that team mentality in how he leads. Focus on maximizing your current role, master your craft, and the opportunities will come. Some of the key takeaways you can expect from this episode: how Carta is monetizing its bellwether status as it further drives into enterprise sales, what the new definition of fast growth is for startups ahead in 2026, and finally, why Jeff values performance under pressure and those who operate from a fear of failure. Jeff, welcome to the Spark of Ages.
Rajiv, pleasure to be with you. Thank you for having me. Look forward to the discussion today.
So Jeff, it was so great to meet you at the Go-to-Market Leadership Society event. You were speaking there about the CRO and CFO relationship, and I love the story. Of course, I'm a fan of Carta. My company uses the software, and it's, as an entrepreneur, it hits one of the problems I deal with, which is dealing with cap tables and all the misery around. So great to have you on.
Well, thank you for being a user. We have, thousands, millions of Carta fans out there now. Everyone loves getting their vesting email with confetti, letting them know they have new vested shares. So we take the same enjoyment and excitement with all of our customers too.
That's right. So just to let everyone know, Carta is a leading equity management platform that helps startups, private companies, investors, and employees track and manage ownership, stock options, and fundraising with ease. So the platform digitizes and automates the complexities of equity management, such as cap table calculations, which is the biggest pain in the butt, regulatory compliance, and even bigger pain in the butt, employee stock plans and valuations, giving all stakeholders real-time transparency and a streamlined experience. So if you are running a company, this is something you deal with. And that's how you guys made a name for yourself, right? Was in that initial pain.
It definitely is. Yeah. I actually was reminded by Henry, our CEO, last week in a discussion. The original problem statement to solve was actually reducing or eliminating the shipping cost of sending an actual stock certificate to an employee or an investor. So it was literally trying to save the cost of UPS or FedEx bills to ship the actual certificate. But what Carta really has become is taking a spreadsheet problem or a service problem and putting it into software and into the cloud. We've done that. That's how Carta got started on the cap table side with stock certificates, and then became 409A valuations. And then we've also done the same problem solving on the fund administration side for VC and PE firms, where you have a spreadsheet or accounting practice in a service model. And we've taken that and put that into software and in the cloud as well. And so we built our fund administration general ledger that now serves 2,500 plus VC and PE firms too.
That's where the real revenue is, right? I mean, that's not where you started, but that's what's become the main source of revenue for the company, growth for.
That's right. Yeah. The cap table business is still roughly 2/3 of the revenue, but as the other businesses have been growing, we internally joke that at some point the cap table business becomes the side hustle for Carta, and it's the connectivity of stakeholders and founders with investors. But over time, the larger opportunities and the future of new products that we continue to add will be around the fund administration platform and this concept of an ERP for the office of a private capital CFO. And that's what we're building building towards. So cap table will always be a part of it. It's on the front end of the ERP, but the reality is the bigger opportunity is to continue to do fund administration and additional products around that to help serve the office of the CFO.
In a way, it's how people get to know you through the cap table product, right?
It definitely is. Yeah. I mean, most people know of Carta as, originally e-shares because, whether they were an employee or an investor of some kind, received a Carta account and received some shares and equity. That is evolving and changing into that's something that we do and will always do and do very well. But we continue to expand who we work with and broaden that network. We did an acquisition about 2 weeks ago, a company called Excelix, which we're basically helping extract very complex, fragmented data points of LPs and pull that into one seamless report for them. So we're working with founders and cap tables, CFOs for venture capital and private equity firms, and now the LP community as well.
That's great. So you're building off that network base, right? As you have this interconnection. So Carta CEO Henry Ward, as you mentioned earlier, has noted that founders often make the mistake of spending heavily on sales too soon, which can mask bad product market fit. So when you were reorienting your revenue teams up to the 2021 boom and facing potentially volatile macro environment, how did you decide what was necessary go-to-market expense versus an expense that might hide underlying friction? And what non-revenue metric was key to ensuring your sales reps were focused on must-have value rather than just closing deals?
Yeah, it's such a great question, and whether it's Carta or any of the stops I've been along the way, there's this old adage of like, if you just add more capacity, then that will equate to more revenue. And we subscribed to that methodology in my first couple of years here because there was product market fit and the inbound flow was significantly high. Reality is like, there's only so many companies being created and only so many companies being funded, which are the time bound opportunities for them to consider a cap table solution. So there's not a lot I can do to help influence that aside from the network effect that we have with law firms and venture capital firms. So we had to change sort of how we think about the business. And it's not just to add more capacity equates to more revenue. It's how do you get more efficient? How do you get smarter? How do you leverage some of the different avenues to source inbound? And so we started working obviously with incubators and accelerators. We deepened the breadth of the long tail of law firms that we work with to solidify that partnership. And so, it's classic Carta, like we adapt, we evolve. As we're doing that, we're building the fund admin product. We're adding products to that. A perfect example is like, we found that there was a problem with distributing K1s in a timely manner. So we said, you know what, we have all the information inside of our platform as is. Why don't we create a K1 product and do taxes for our firms? And so for us and the team, that's great. It allows an upsell, cross-sell opportunity to existing customers. It allows us to add something new to new business customers as well as far as the complete offering that we have. And that allows us to expand revenue. And like, it's one of the things I love about Carta is we're constantly looking at sort of the three main businesses of companies, cap tables, venture capital, and private equity, and then figuring out what additional products we can add to the offering to add more value to our end user customer.
When you got into that situation of like, so things are flying in 2021, and after that, the market kind of tipped, right, for startups. Funding fell, especially with software companies. They were exploding and they were getting amazing valuations. And it kind of cut it all. Everyone, there was a big drop in it. So did you have to cut go-to-market expense, or was this where the new products enabled you to supersede that situation?
So a little of both, right? So we went through COVID where we did a reduction and then we started to build the sales team back up. And then you realize like, wow, we can do this maybe a little bit leaner than we had done before. And how efficient can we get in the model? At that point, I think we had sort of an overlay team selling our total compensation product because we experimented. We thought specialization for that product would be the best way to take it to market as far as the sales organization structure. After probably 2.5 quarters or so, we learned that like we can actually have the same account executives sell all the products that we offer to the newbound customer base. And so we got more efficient in the number of headcount that we needed and more efficient in overall resource spend to make sure that we're optimized for the customer experience. And then also think about the investment businesses that we're building simultaneously that become the future growth and the future cap table businesses for us along the way.
That's really interesting.
And you mentioned, a metric that sort of outside of revenue to measure. One of the things that we've been watching closely over the last several quarters is just a productivity metric around number of meetings had or number of chorus calls we have, Zoom calls by AE per month. And sometimes it's not the best indicator. Other times it's very clear of like productivity. Obviously, like the folks that are exceeding quotas and getting into accelerators and making a lot of money are the ones that have more meetings. And so like that hasn't changed in the 20 plus years I've been doing sales at Oracle, DocuSign, and Carta. The busier you are, the more customers you're talking to, the more opportunities you have to sell and be more successful. And that formula hasn't changed. So we're watching those activity metrics too.
That's your leading indicator. Like if you're,
It is,
because
yeah.
because by the time you get to the end of a cycle, your time to make a change is, you're getting stuff way later. So this is your leading indicator.
It is, yeah, because you can track the traditional like number of calls, number of emails, but frankly, like everyone is doing that, and the sophistication of the buyer has changed with like the introduction of AI and all the information that people can gather prior to getting on a call with Carta. The customer is prepared, and so doing a cold call might not necessarily be the best way to connect with them, but making sure that you're doing all the things that are within your control to get as many meetings as you can to make sure your calendar is as populated as it can possibly be to give you the best chance to be successful.
That's great. So are you finding the data indicates nowadays that, like you were saying, people find you before you find them, right? As more Gen Z folks are buyers, they're even more so than Gen X folks, right? And then are you finding that AI is helping you with that as well? Like, are they educating themselves with AI or using AI tools, or maybe it's both?
It's a combination, not to dodge the question, but it's always a little bit of somewhere in between, right? And typical with Carta, I can't always answer one question with just the simple answer because the three businesses are very unique. They're at different stages of maturity as well. So as far as like cap table information and it being readily available, yes, it's a newer generation of founders typically on the forefront of cutting edge technology. And so they've done their research. They typically are working with a law firm or a VC firm that has hopefully recommended Carta to them as well. Typically, they've worked with Carta before. So from a cap table standpoint, you're getting a warmer lead or an introduction with someone that is actually understanding Carta and what we do. That's also coming true in the venture capital business for fund administration. In private equity, we've spent a lot of time over the last year and a half in educating a market of what Carta's offering is. And so you sort of meet people where they're at with their familiarity with Carta and what we offer. And I would say almost 100% of the time, people that we talk with, it doesn't matter if it's a founder of a cap table business or a CFO of a private equity firm, they don't fully understand the full breadth of everything that Carta does and offers. So it's an opportunity for us to be a trusted advisor, educate a prospect on all the things that we have to offer and ultimately add value for them.
So now Carta successfully utilized a velocity model to win early stage founders and emerging fund managers. However, the current market demands a focus on capital efficiency. As you know, growth rates have generally declined across the SaaS industry in 2024 and 2025. And not sure if you're seeing that as well on your side, but how did the CRO organization pivot its primary efficiency focus from optimizing customer acquisition cost or CAC payback based on a high volume startup deals towards demonstrating long-term growth endurance within the nascent high value private equity segment, where a lot of future growth is expected to originate?
Yeah, well, you nailed it. Carta was started off of working with early stage founders. And, we even created a launch product, which is free for founders that have raised less than $1 million or have less than 25 stakeholders on their cap table. So we offer that at no cost because the idea is we get them on the platform early. If they grow and they're a successful company, they'll convert to a paid plan at some point. And we want to kind of meet them where they are in their journey of growth, help advise them along the way, have, a decade plus long relationship with them on their journey to potentially IPO. And we can do all the things for them along the way. We took the same formula with winning early stage venture firms when we started this back in 2018-19. We didn't go after the largest firms in the world that were hundreds of billions of dollars of AUM. We started with first time fund managers and emerging managers and made sure we won that market. Take that cap table formula, apply it to what we did in venture. That's why we have 2,500 plus firms using the Carta platform now. Ultimately, though, you're right. Like we have far greater aspirations as a company to be much larger than we are now. And to reach those aggressive growth targets, you can't do that solely off of emerging managers or smaller funds. And so you naturally, like most companies, go through this inflection point of, I did the SMB thing, now I need to evolve into mid-market, enterprise, and cross-market as well. And so for us, it was working with larger, more established firms, which we're doing now and have been for the last several years, and then working across market in making sure that the offering that we have is also applicable and relevant to private equity firms too. So it allowed us to move up and over to continue to earn higher ACVs that help us achieve the higher growth targets that we're looking to do as a thriving business.
Yeah. So did you end up getting a different kind of sales force, or is it the same sales force? And then I'm sure your marketing changed as well for it.
All of the above, yes. Different sales force. The profile of an account executive for our cap table business is an SMB type profile, very different than an individual that we bring on board to work with CFOs of, multi-billion dollar private equity or venture capital firms. So there just takes a different experience set, a different background set to be able to do that. So the profile of the sales organization has evolved over the years to where now I feel like we're optimized to be able to have the right conversations with the right prospects and where they're at.
That's great. So you're borrowing off your experience from, you're doing enterprise at Oracle, right? Selling
Yes. Yeah.
kind of like me in my early days. I was selling computer systems at Sun Microsystems and at AT&T. So you have the enterprise sale there, and then you have the DocuSign SMB sale.
Yeah, there's so many things, I guess you don't realize it while you're sort of growing up in your career, but so many lessons learned from my time at Oracle and DocuSign that I apply now to, going from SMB to enterprise or doing cross-sell and upsell motions, multi-product, customer success. There's so many things that, I was learning at the time that I didn't realize would be so valuable and beneficial in the role that I'm in now.
Just like you're talking about, you have a simultaneous go-to-market motions with high velocity, 14-day cap table sales cycles, right? To 90+ day enterprise VC fund administration motions. So what do you find to be the single biggest organizational tension point that this standardization paradox creates outside the sales team? So like you have RevOps, enablement, marketing, product teams. How do you prevent that internal friction from negatively impacting the customer experience for your largest enterprise clients?
It's not easy, but I would say that, the key to the success of all this is the transparency and the relationships that I've created over 7 years now with my peers as part of the exec team. And, I work very closely with Henry and Charlie, our CFO, and Nicole, our CMO, and the product team, and Rushali, to make sure that like everyone is an understanding of where we are from a pipeline perspective and the opportunities that are part of it. And also understanding that each of those businesses that I've described, they're at different maturity levels of the pipeline and the consistency for which they perform. And so, yes, we expect the cap table business to move very quickly and it's very consistent. We have more enterprise-like deals on the venture capital and fund admin side and in private equity that are longer sales cycles and oftentimes very much time bound by a firm either not having a great experience with the current provider and or raising a new fund. And so I can't always control those two time variables, but what I do need to make sure is that the team is in best position to create relationships over a period of time for when one of those two things likely happens. And we're there to be able to share what Carta can do to help make a better experience for them.
This is the kind of stuff I love. Like, if you're in marketing, we are always looking for that moment that matters, like what takes someone from their current state to wanting to switch, right? So in many ways, you're not in a nascent market anymore where you're just educating them. In some places, they have other solutions and now you're trying to switch them over. So like, how's that interaction with marketing where they're helping you find that intent, the intent of that person to switch, and then turning you on to it? Or you're probably looking at it together, right? You probably look at your calls. You're probably looking at.
We review everything together, which is wonderful. I feel very fortunate that I have a great partnership with our CMO, Nicole Bayer, and her team, because we look at this together. And from our mindset, it's a shared number. It's not just Jeff's revenue number. It's our collective number to hit together. But again, the businesses are at different stages. So typically, a cap table lead will come in and the current incumbent is like do nothing or doing it in a spreadsheet. So there's an opportunity for us to insert like what Carta does and how we make that more efficient for the founder. Very different than like the warming of a lead and the educating of a prospect in venture fund admin or private equity that creates that longer sales cycle. We've also, there's SF Tech Week has just happened, LA Tech Week. We try and leverage some of these broader events to do some of our own what I would call more curated specific events for Carta customers and prospects. And we've been doing a lot of that in the last couple of weeks here, bringing together customers that we know have had a great experience once they've moved from another provider to Carta and have them help share their story about their experience and why it's different and better since they've started working with us. And there's no one better to sell your product than an existing customer to a prospect. Like, so them hearing like the truth and the accuracy of their experience has been really, really helpful. Those things don't happen without the support of the marketing team that we've now have in place.
That's interesting. In one of our previous podcasts, we were talking about these, the B2B marketing practices. What folks are talking about today is that many of the digital metrics that we're using before, many of the digital methods we're using to reach folks have become a bit saturated, or You've hit a point of optimization. So now intimate events are actually more valuable than they used to be. Are you finding the same kind of thing or?
Without a doubt. I just got back from an intimate event that we did last week with, call it 10 customers and 15 prospects. And we brought in majority of the C-suite, product, marketing, sales, to talk about how we work with customers. We actually, which was, I thought, brilliant, was we did breakout sessions and actually like work through some vignettes of scenarios that we think a CFO might go through in reporting, and ask them to like break into groups facilitated by people from Carta to help with the conversation of like, does this resonate and what would you want to see built into our product? And this is legitimate. Like, we take the product feedback, and later that evening I was with our CPO and she was already talking to her team about building the stuff that we had heard about just hours before from prospects of what they would need. So it's like moving and happening that fast, and we're able to be that nimble still, even though we've become a bigger company, to say, this is what the market is telling us is needed from prospects. Let's go build into the product for them, which is phenomenal.
When you get that kind of cycle time, that's just incredible.
It's incredible. Yeah. But, this is also like, Vishali's also been at Carta for, I think, 9 years now. I've been 7+. So we have a cadence of working together and understanding, like, we're hearing this, we need your help, and we need involvement from the entire team. This isn't just a sales thing to get, revenue over the line.
That's great. So you've also at Carta made a substantial strategic move into private credit. Given the general market sentiment that direct lending and private credit offers attractive yields and are set to grow, what specific market saturation or operational thresholds do you anticipate private credit hitting by the end of 2026? And how will that influence the CRO organization and go-to-market resource allocation between VC, private equity, private credit verticals?
For us, it just became a no-brainer once we started working with all these PE firms and understanding that they have a credit arm as well. And so we've started working with many firms doing the fund administration for the firm and then also servicing the credit loan component of it. We were doing that through a partnership that we had with another provider. Just last week, we announced an acquisition of Servatis, the company that will now be part of Carta, that will help us service these loans as well. So from a resource standpoint, like, we're putting our money and resource behind making this a great experience for private equity firms that come to Carta for both fund admin and for loan servicing. Now we have the software and the services to be able to do that. To answer the go-to-market piece, as I'm doing that, I'm also building out the sales team and the marketing functions with Nicole's help to make sure that we're prepared to go capture this market, because we do believe that becomes the biggest opportunity for us, especially over the next 3 years.
That's amazing.
We're really excited about it. Yeah, just in the last 2 weeks, we've done 2 acquisitions,
Wow.
Celix and Servatis. So all things helping, the LP community and loan servicing. So all the things that we're banking on for the future and the growth of the company, we're doubling down and leaning into.
That's amazing. And so you're not necessarily pulling from one to the next. You're just taking the growth and you're channeling what should be next.
Yes, we believe so. It's like, find the signal in the market and then figure out, what do we build to go make it better? And then are there things that we can buy to help supplement our offering too?
That's great. So we're going to get into a little bit more about like what you see. Now you have such a breadth of data that you're seeing from multiple places in the whole investor, venture, now private equity ecosystem. So at Carta, you're tracking essential metrics for your customers like ARR per dollar of capital raised, right? Capital efficiency to increase productivity, right? It's one of the cool parts about your product. However, with the AI revolution, there's massive non-traditional infrastructure investment, energy consumption, custom silicon to reduce dependence on hyperscalers. So as the CRO, do you observe the financial models of AI native private companies, which Carta serves, shifting? Do you see that shifting? Is the requirement for heavy infrastructure investment leading to like a bifurcation capital efficiency metrics? So you're differentiating application layer SaaS startups from true AI native deep tech companies that bear high compute costs. So are you seeing that in some of the data that you see?
Yeah, we do. If you haven't or don't follow Peter Walker, he's our data analytics specialist in-house here at Carta. He is hands down the best as far as all the information that we have, taking that data and putting it out into consumable reporting, both on the cap table startup side for founders and then also on the venture side. So, what we're seeing is like a bit more time in rounds right now. The rounds being raised are larger, obviously, probably not sharing any like shocking news to you, but that's what the data does show. We also, on the cap table side, we're seeing an influx right now of companies being created. No surprise, large large in part due to all the AI companies being created. How many of those become the next generational companies? Time will tell on that. But we're here to support that growth. There's not a VC firm that I talked to. I was at the dinner last night, have another one tonight with different firms and founders where everyone in these venture funds is talking about like investment in AI companies and what you're doing to use AI to be more efficient and maximize what you can do. So all of those things that you hear and feel in the market as you're out talking to people all resonate true in the data that we gather from all the companies on the platform too.
Yeah, so I would think so before when you were investing, right, the R&D expense was of a certain size, but then a lot of money for SaaS companies would go into go to market. But now when you're looking at these companies that just have massive compute that they have to invest in, they're just like putting so much into infrastructure. So your model is going to change in terms of you're putting so much into infrastructure, you're probably putting less into go to market. And so the whole return on equity model shifts, right? Because before you didn't have as many assets. Now you have massive assets. So I wonder how you see that in terms of valuations and how folks look at things, because $1 here is not $1 there. Although
Right,
right now
right.
everything seems to be rising for
Yeah,
AI.
it's interesting. I had someone mention to me last night that, through the use of AI, they've gone from 45 SDRs to 15 SDRs. And so interesting thought, like I'm in a different position and stance on that right now, where to me, using and leveraging AI is less about how do you reduce cost and like reduce your headcount. If anything, it's how do you learn how to use AI to make everyone more efficient and make what you're doing 10x better than you already are, not reduce cost. Now, earlier stage, smaller companies clearly looking to be more cost efficient. So do you spend $1 less there, put that dollar into R&D instead, and do you maximize in a different way? I think that to me is just difference in size and stage of company and where they're at on growth trajectory. And neither is like a right or a wrong. It's just where they're at and where they need to head. One thing I find interesting too, the more people I'm out talking to in meetings, like everyone kind of gathers, feeling each other out of like, what are you doing with AI? How about you? And like everyone wants to hear all the ideas. No one has the like, here's the full stack of AI tools that, if you do 150 million in ARR and you have 300 people in your company, and here's kind of what your organization looks like, here's the stack that you should be considering for AI. No one has those answers yet. So everyone's kind of fishing, right?
Yeah, it's too uncertain. It's too
It's
new.
too uncertain and it's moving too quickly.
I give my team, I have a 200-person team, and I give my folks a lot of free rein on the operations side to go play with a whole bunch of tools, right? And every quarter when I talk to them, they're using new tools.
Yes. Yeah.
I'm kind of blown away by that. They're using new tools. I did not force, but I pushed the answer on, well, we have to pick one agentic platform because I want them to unify what they're getting from those tools and turn it into organization-wide processes. So there is this whole thing of there's uncertainty, but you got to choose at some point something.
That's definitely true. We experience the same thing. And, it's one of the things I love about Carta. There's such an entrepreneur spirit here that people just want to go learn and experiment and try different things. That can also get us in a little trouble where everyone is doing all these different things. And so that was starting to happen with AI in a good way, people experimenting. But I love what Henry did. It basically said like, hey, if there's something that you want to use AI, you need to submit a less than 3-minute video demo of what it is, why it's important, why it'll help us. And then kind of filtering, deciding, okay, is that something we should do? And then if so, is it something we would buy or something we can just build on our own? And so it helped us start to like streamline a bit of the chaoticness of, okay, all this AI stuff and everyone experimenting everywhere.
Because you want to get to a point of reuse, right? If everybody keeps building these agents to do all kinds of things, if they're not looking at it from a reusability point of view, you'll end up building multiple streams of the same thing, which is fun and it's interesting. You want to let that play out, but you also want it to come together and be leverageable. So
That's right. And most of my visibility to things was sort of the GTM usage of this. But then you think about the rest of the company and there's all these other use cases for it that were being experimented with. But obviously, like, we're embracing it here. And, frankly, there's so many ways we're benefiting from it already. My SDR leader has done a phenomenal job and using some tools to help us be more efficient and sort of coverage models and things like that. We talked about earlier, moving up market, you get more complicated sales cycles. Oftentimes those come with RFPs. We have some tools now to leverage populating RFPs through AI. We launched our own agent to help with performance reviews as well. So there's a lot that we're doing that just wasn't even on the table 6 months ago.
I literally can come into a meeting and have the whole workup on who the person is, what the company's doing, just a full audit in minutes. It's amazing. So let me
Yeah.
ask you about, so we've seen, as we know, this massive growth in AI investment. It's like the hype cycles of 99 in many ways, or maybe more recently with the whole blockchain, NFT boom. So from the perspective of what you folks see in your proprietary data, what signal do you look at in the private market to distinguish a financially successful investment or sustainable investment in genuine structural AI innovation from short-term momentum-driven speculation that risks creating a financial bubble amongst AI startups? So are you looking for a bubble?
So, I don't know that that's like Carta's role
That's
in
not
this
your
is like
role,
looking
but
for
do
the
you
bubble.
see some of that? Yeah.
Yeah, I mean, so here's where we feel it. I don't know that it's our role to predict the bubble piece, but like when we know that there are X new companies being created every month and coming onto the platform, like that tells you something is happening out there in the market that is generating more companies being created. And then you see more funds being raised. So we have, repeat fund admin customers that are raising new funds. And the purpose of the raise of the new funds is to invest in AI companies. Then that tells you from both sides, the founder side and the investor side, that there's signal out there that this pocket is being created. Whether it's a bubble that burst or not is for others to kind of figure out how that plays out, and like the actual productivity or success of those companies and the longevity of it, more importantly.
That's great. It's interesting to know, and I'm sure that your data analytics group is just looking at the macro data over different times. It must be an interesting study. So,
Yes, follow Peter Walker. He's phenomenal. He's got all the data insights for you.
all right, that's awesome. Well, Jeff, now comes the fun part. We're going to play the game. This is where you get to have a lot of fun with me. Welcome to the Spark Tank, where entrepreneurial excellence meets athletic excellence. And today we're discovering what happens when you combine hyper-growth revenue leadership with hardball heroics. We're thrilled to have Jeff Perry join us, a revenue powerhouse who scaled Carta from $20 million to $450 million in ARR and knows a thing or two about clutch performance under pressure. So Jeff, you played NCAA baseball at Santa Clara University. From the diamond to the boardroom, you've always understood that great teams win championships, whether that's a World Series ring or crushing a revenue target. So with the World Series now upon us, we're putting both sides of your expertise to the test with stat or fiction.
Okay.
The Baseball and Business Records Challenge. We're going to alternate between iconic World Series moments and jaw-dropping private company growth stories. Each question presents a remarkable statistic and achievement. Your job is to figure out who made history, whether it's a legendary player stepping up in October or a visionary founder building a unicorn. Let's see if your ability to spot a winner is as sharp on the baseball field as it is in the revenue trenches. So you ready, Jeff?
I'm ready.
All right, this is going to be fun. And as I told you before, I found this hard. So it doesn't matter how many get right, we're going to have fun with this. So round one, World Series edition, the business connection. Here's the stat. In 1919, this team became the first franchise to sell World Series radio broadcasting rights, pioneering the concept of media monetization in sports. What makes it unique? This deal laid the foundation for the multi-billion-dollar sports broadcasting industry we know today, transforming baseball from gate revenue to a media empire. The business tie-in, just like early tech companies figuring out digital advertising, this team invented a revenue stream that didn't exist before. All right, which team achieved this feat? Remember, this is 1919. Okay, A, Chicago White Sox, B, Cincinnati Reds, C, Boston Red Sox, or D, New York Yankees?
D, New York Yankees.
You sure about that?
No, but that's my answer.
All right. You said it with such certainty. I didn't know if you
I
had
think I might be right, but we'll see.
All right. Actually, the answer, and I was surprised about this, I would have picked the same thing as you. B, Cincinnati Reds.
Oh, wow. Interesting.
Yeah, the Cincinnati Reds were pioneers in sports media monetization, understanding that broadcasting games could create new revenue streams beyond ticket sales, kind of like how modern SaaS companies discovered recurring revenue models. So who knew it was the Cincinnati Reds, the big red machine they won those World Series in the mid-70s. I used to root for them because I was born in Ohio.
Yeah, good for them. It's been a little bit of a drought recently, but yeah.
Back then they were good.
That's right. Yeah. And the red machine, for sure. The big red machine was excellent. Yeah.
Okay, round two, private company growth edition. Here's the stat. This fintech company reached $1 billion in valuation in just 2 years from founding, one of the fastest paths to unicorn status in fintech history. What makes it unique? They achieved this by eliminating traditional banking infrastructure and building a mobile-first challenger bank that resonated with millennials. Which company achieved this feat? We're going to give you 4 fintech companies. A, Affirm, which is buy now, pay later. B, Robinhood and trading. C, Chime, low-fee digital banking. They just went public recently. D, Coinbase, which was in the crypto brokerage market. This is a tough one. So A, B, C, or so Affirm, Robinhood, Chime, or Coinbase.
Robinhood.
Why do you say Robinhood?
Because you mentioned it took on a younger generation, motivated them to be investing, and that's where I went with the answer.
I would have thought so too, because I thought, yeah, Robinhood exploded during that time, especially in 2021, 2022, actually was Chime.
Wow. Okay.
Yeah, I mean, who knew? They hit unicorn status, demonstrating how fintech startups could leverage mobile technology and simplified user experience to capture market share from traditional banks at unprecedented speed.
Wow. Amazing.
Frankly, I could have picked any one of these four.
All very successful stories,
Yeah,
right? Yeah.
super fast growth. So that was a tough one. Round 3, World Series edition, the pitcher power play. You're going to go back in history on this. So the stat, only 15 home runs have been hit by pitchers in World Series history. But these two pitchers each hit 2 home runs in World Series play. So they account for 4 of the 15. What makes it unique? Since pitchers are notoriously weak hitters, as you know, having 2 World Series home runs represents an extremely rare combination of pitching excellence and hitting ability. Here's the business tie-in. Like a founder who excels at both product development and sales, imagine that. Rare dual threat capability that creates competitive advantage. Which pitchers achieved this feat? A, Bob Gibson and Dave McNally. B, Sandy Koufax and Whitey Ford. C, Joe Blanton and Curt Schilling. D, Babe Ruth and Walter Johnson.
D.
Yeah, I would think so too. Freaking Babe Ruth was one of the best
You would
hitters and
think.
pitchers ever, you'd think.
Yeah.
But it's A, Bob Gibson and Dave McNally.
Oh, really? Okay.
I couldn't believe it. I was going to tell you, like, don't say Joe Blanton and Curt Schilling. Those were AL, like, Curt Schilling was an AL pitcher.
Well, until he was with the Diamondbacks.
That's
yes.
true. That's true.
Yeah.
But I don't think he was much of a hitter.
Or the Phillies. Yeah. Yeah, you're right. Actually, no, when he was in the World Series, he was Red Sox. So, yeah.
That's right.
He wouldn't have been. He would have been DH for then. Yeah. I like the game. I'm just not very good at your game, Rajiv.
I think the game is great, and I'm sorry you're not getting, but it is fun, and I'm learning a lot because I frankly, like you, would have gotten all 3 wrong. So Bob Gibson and Dave McNally were the only pitchers to hit 2 World Series home runs each, demonstrating rare versatility. They were the Shohei Ohtani of their time. Like business leaders who master both technical execution and commercial success, these pitchers proved that elite performers can excel across multiple domains, a valuable lesson for today's modern full-stack executive. All right, here's number 4, Private Company Growth Edition. And again, this one's really hard too. So they didn't give me any layups. Here it goes. The stat. This company grew from 0 to $1 billion in ARR in approximately 5 years through pure product-led growth, with no traditional sales team for most of that period. What makes it unique? They proved that exceptional product design and viral adoption could replace traditional enterprise sales motions. Which company achieved this feat? You have 4 choices.
0 to $1 billion in 5 years.
0 to $1 billion ARR in 5 years. A, was it Slack? B, Figma. C, Notion. D, Canva. As a hint, I've had Bill Masitis on my show, if you know who he is.
I don't know, Bill. I'm going to say B.
B, Figma. You would think it would be Figma.
Something tells me I'm wrong again. Yeah.
That's why I was trying to guide you with that one. Bill Masitis was at Slack.
Oh, okay. Yeah.
And at I think he was at, no, not DocuSign. He was at Zendesk. So yes, he was the CMO and CRO there at Slack. And that was one of the big things that they did is it was a pure product-led growth strategy. And I was surprised actually that they went from 0 to $1 billion ARR without a traditional sales team. I don't know how you do it, but if you have an amazing product, it can happen. And it proves that viral adoption and exceptional UX or user experience can drive enterprise sales. It's the most amazing thing.
Definitely. So, and drives the network referral effect as well.
I mean, I think that's what you're living in, right? It's that.
That's right. Yeah.
It's that you guys are so cleverly going after, like, you have the cap table offering and it just allows this network effect that happens. That's just, I think it's a flywheel that everybody wants.
That's right. That's right. Yeah.
Somehow Slack did it. Well, I think the way that you would think about the way they did it was because they focused on productivity. And if you're only working with one person in the company, it's not of any value. And so you give it to 2 or 3 and you have a free version. Before you know it, you have a department. Before you know it, you have the whole company jumping in.
Yeah, interestingly, when I joined Carta back in late 2018, as the first year or so, Slack was our largest customer. And there was a point where they were headed toward IPO and wanted to remain on Carta platform through IPO and become a public company. We wisely decided to work with them. Henry worked with their exec team to decline the opportunity to do that, which had to have been really difficult for us to decide to do at that time because it would have been such a headline win as taking someone from private to public. The
Yeah.
reality is, had we attempted to do that, we likely would have failed miserably at that time and created a terrible experience for them, which would have set us back tremendously. And so sometimes that, like, the shiny object right in front of you, like, it's best to say, like, is this the right thing for us at this size and stage now? And so we ended up we helped transition them off of Carta to another provider to do the public piece of it. But
Wow.
we worked with
That
them
is
for many
so,
years.
I gotta say, that is so ballsy.
Totally.
It must just hit you during that time. Like, here's a huge opportunity. It takes us into a whole new dimension and we open up that whole market. It's a natural outflow of what we're already doing.
Exactly. Yeah. And they were the darling of, private to become public and IPO. So to have to respectfully decline and sort of admit where we were at from the public offering at that time, I thought was pretty cool. But Henry's done some really, amazing things from that perspective of just understanding like what needs to be done to make the product and the experience better for customers, even if it means sacrificing like revenue or different opportunities. Another example is about a year before I got to Carta, they had signed so many customers that the implementations team had gotten behind and couldn't keep up with getting the cap tables implemented. So he literally paused sales for, I believe it was about 2 months, and said, every salesperson is now becoming an implementation person effective immediately and helping us get through the backlog to make sure everyone that we had signed up had been properly implemented. It did a couple things. Number one, it cleared the backlog and got us caught up, and then we resumed sales. But it also taught all the salespeople at that time actually what a company goes through to get implemented on Carta. So they were that much better prepared for the calls they were doing with prospects in the future because they knew the experience that they were going to go through.
Yeah, I mean, they gain empathy. It's so powerful.
Totally.
Yeah.
I find it such a remarkable move at that time when like the pressures of fundraising and showing, posting revenue numbers and saying like, we're going to pause revenue right now to make sure we get this part of the business right. Like, talk about a bold move. That definitely was. And that was 2017.
Wow. So Jeff, if you were the CRO in that spot, what would you have said?
I would have said, Henry, can we maybe go grab a beer and talk about this? Because I'm not sure you're going to change my quota and target for the team for that time period. So actually he would have. Extremely reasonable and like always pushes us to always think about doing the right thing. It's one of the things I love about my experience here is, it's not always about the number. Of course, the number is important, but it's about, like he calls it, inputs. Are you doing the right inputs to make the business better? And that was a perfect example of like, do the right input to get the business right.
That's amazing.
But yeah, we would have had an interesting conversation for
It
sure.
would have been, it'd be quite, what? You want to do what?
Yeah.
And he even talks about it in some of his conversation between missionaries and mercenaries, right?
Yes.
And this is where you have to really go into yourself and say, why am I here?
And that's a missionary moment right there, right? Like,
Yeah.
do you believe in the cause? Are you behind it? Help support it. Do whatever it takes to make a great customer experience, and then we'll figure out the next thing from there.
It's a tough test. Yeah. And it's a great one. So Jeff, did you always know you wanted to work in technology? Was there like a specific moment or project that sparked your passion? How'd you discover it? What got you sparked?
As you mentioned, I played baseball at Santa Clara University, and I was maybe the kid in the category of like, don't know exactly what you want to do after college. And so I had an opportunity to start working at Merrill Lynch through a connection that I had. And it was entry level to the Series 7, Series 63, get licensed, help do trading. I got paired up with a senior broker on the team at that point that I learned a ton from. And that's where I started working the cashier window in the evenings. And we actually had clients that would come deposit cash, checks, and stock certificates. And I vividly remember one of them being an eBay stock certificate that was, ended up being, I did the calculation, worth hundreds of thousands of dollars that I was depositing into this client's account. And I remember this light bulb moment of like, do I want to be the person that's trying to help reinvest those shares somewhere? Or do I want to go to one of these tech companies and actually receive equity like that individual did. And so, look, I learned a ton in my short time at Merrill Lynch, and I was younger and impressionable at that time in career, but that got me an opportunity to knock on some doors, and had a door opened at Oracle, and that's where I started kind of in the tech space. And I actually did sales, but for the marketing team, so exhibits, sponsorships for the Open World Conference, which ended up becoming the Dreamforce Conference over time. And so that was my first sort of entry into the tech world. I saw this massive partner ecosystem around Oracle and thought, wow, there's all these other companies out there. I then got into the product sales team, and I did a little bit of everything from database to middleware products. I moved into the hardware organization when we acquired Sun Microsystems. I always just kind of said, like, keep the doors open and I'll raise my hand to help do and contribute wherever I could. And that always led to whatever the next opportunity was. And, here we are, you fast forward all these years later, and I come to Carta, the company that has eliminated the stock certificate that I was like chasing, 25 years earlier. So,
An amazing story.
yeah, it's
Yeah.
funny how it comes full circle, but I've been fortunate to have, great stops along the way, great mentors and people that like took a little bit of a leap of faith and believing in me to take the next opportunity or next responsibility. I had that many times over at Oracle. Had an opportunity, with Lauren Alhaddif and his team at DocuSign to be there, and help grow and scale the SMB teams and some of the verticals, and was there through the IPO, and then had an opportunity to say, I want to start even earlier and smaller and Carta found me, and I found Carta kind of simultaneously, and one thing led to another, and we're roughly 20 million in ARR and, healthy business. But it's like, who would have thought it could, evolve into multiple businesses and multiple products inside of each business. And now the 20 million is 500 million and beyond, and we're headed to $1 billion plus.
Did you know that when you first got in?
I mean, does anyone know? Like, are you hopeful? I remember my sort of last meeting with Henry prior to signing was at Dutch Goose in Menlo Park. We had a beer and a burger and talked about like the potential of the company, and a lot of that has come true. But I would say it's come true differently than like we would have thought in that booth at that time having that burger. It just, it would have been like the cap table business and how that continues to expand and grow and what that leads to. It wasn't as much about, the fund admin business and private equity and LPs and all these things that 7 years later we're now doing.
I don't think any of us would have anticipated, even those who are into tech, that private equity or companies staying private longer would be such a big trend. How many, trillions of dollars are now in private markets, not in public markets? We wouldn't have forecast that. I mean, Dodd-Frank, that is probably one of the contributing reasons, but it's also that it's easier to get done or stay private when there's pools of capital there for you. So
yeah. So, when back in those days when I was meeting with Henry and Charlie, and, it felt like Carta was onto something. This could be, a great opportunity. As it turned out, it evolved over time. And you're right, like the landscape is totally different now. I mean, back then companies were on a chase to get to 100 million ARR. And that meant if you do that, you can IPO. And now we're in a totally different world now. And so like, what is a IPO ready company? And then more importantly, what is a IPO ready and can be successful beyond that is the more important thread to pull there too, which is one of the things, most proud about is what we built here is being like thoughtful and methodical in how we do it, and being at a growth trajectory that, we aspire to be, and also, at a level of profitability too, so that we've hit both ends of the metrics.
that's awesome. So we always ask our guests to name a historical event or person or movement that inspires you. And you answered, quote, people that perform under pressure like Tom Brady. I think
Yeah.
you go to high school with them, and people who are motivated by fear or failure like Larry Ellison. You didn't go to high school with him. What in particular about them lights you up?
Well, thank you. Yeah. So yeah, I did go to high school with Tommy back in the day. That's many years ago now. And so it's actually been fun to follow someone that you feel like you kind of knew as a younger kid and watch progress. And then all of a sudden life-changing experience. And then, the folks that, we knew him growing up, and you knew he was a great athlete and all these things, but then to watch it happen on that stage and how he handled it is like all of us have taken some pride in as well. And you can't help but become a fan of sort of the pressure and the microscope that you're under on that stage. And then the ability to like, not just do it once, but like multiple times repeatedly demonstrate that consistency in performance. And, I've watched enough and I've seen enough on it. Like sometimes he's got to be the guy that had to be probably tougher on teammates and be the guy that's motivating and driving. Sometimes he's the rah guy. And so sort of knowing your place in this. And I feel like you try to take a lot of that into what we do as sales leaders too, is like, you ride kind of the highs and lows, but you also keep this sort of temperament of like, you've been there before, what success looks like, that it's not always easy to be successful. And sometimes you're going to have some failures. And so you learn from that, and you pick up the pieces and you move on. So I think there's a lot I've taken from just watching Tom over the years. And obviously it's just fun to root for someone that you kind of knew when you were younger.
It's incredible. Yeah.
Yeah.
I grew up in New England, so I'm a Pats fan. And so I studied
Yeah.
everything Tom and Bill Belichick have done. So it's amazing. But then you mentioned fear of failure, like Larry Ellison. So
I actually feel like fear of failure, I've always operated that way. Like I went to Santa Clara University, pitched there. I had a fear of failing because I would let my team down. And if I let my team down, I probably at some point would like lose my role and my opportunity for playing time or time to contribute. And so I always wore this little chip on the shoulder of fear of failure. I actually think that was a taboo statement. There was a time where it's like, if you say that, that's a weakness and like you shouldn't say that. I have since heard more people. I recently read something about Larry Ellison operating that way too. And having worked at Oracle, that resonated with me. So I've always like tried to just embrace it versus like hide that like I've operated that way and just say like, yeah, like I don't want to fail. I don't want Carta to fail. I want to be successful both personally and I want my teams and my people under me to be successful. So operating with a little bit of that fear of failure, I think keeps you sharp. It keeps you motivated. It keeps some edge to you. For me, it keeps me like energized and excited about what we do and who we do it with. So I'm not letting go of the fear of failure. I'll always operate that way. Yeah.
I think that's a great way of putting it. It's unique and interesting. And, we all wake up as entrepreneurs or business leaders. We have imposter syndrome, right? We wonder, can we keep this going? And what keeps us going? And I promise this, can I deliver it? Right. And every day you have to wake yourself up and say, I can do it. But that fear of failure is one of the motivators.
Totally. And one of the things I love most about sales leadership is to me is very much like pitching in baseball. Like there's such an individual component to being the pitcher of the team, yet you're still part of this incredible team sport. And it takes everyone like pulling their own, part of the weight to be successful. But a lot of the onus is on the pitcher to perform and the pressure is on because that they can have a significant outcome, both positive or negative, or influence of the outcome to that positively or negatively. So I've kind of thrived in the pressure of that, which I feel like is translated really well to the business side. But it also, I love the team that I work with and the team that I'm surrounded with. And we celebrate the successes together and, we work through the challenges together too. And that's the beauty of the team sport aspect.
So Jeff, if you could magically make one daily task take zero time, what would you choose and what would you do with those extra minutes?
I would say it's probably some of just the operational roadblocks that come up. It's not like one specific thing, but like I'll start my day and I'll get some slacks from someone that like, hey, we have this issue with, someone's comp was not correct or an offer letter didn't go out right. Or the level's the same between this business unit and that business unit for a level 4 AE. And it's like, some of that stuff, it just like it's roadblocks, it's time sucks. It doesn't just take my time. I then have to go triage and it loops everyone else in. Also, it's like we just spent like 20 business hours on this ridiculous thing that frankly should have just been solved really quickly or should have never been an issue. So if I could eliminate some of those things, which I don't really know how to do, they're always going to come up. I think that's a sign of like growing, evolving business. But with that, I would take that and I'd like to do two things. I'd split that time. As you get bigger, it gets harder and harder to stay super connected with folks that are maybe a couple levels below. I feel like I used to be really, really good at that. And then as things evolve, it just gets harder. So I'd spend some time there. And then, what we've really learned over the last couple of years is the more time I and the rest of the exec team can be in front of customers, I would use the
That's
time
gold.
that way instead. Yeah, it's gold. It's how you create great experiences. It's how you create raving fans that tell the next prospect that they should work with us. So I would use the time that way.
All right, that's a great answer. If you could swap lives with someone for just 1 week to see what it's really like, who would you choose?
Maybe the president. That'd be an interesting seat. I don't think it's, something you'd want like full time, but a window into that world would be really interesting.
That would be interesting. I think there's something like 30 plus people that arrange president's calendar. Really highly scripted situation where the situation is scripted yet extremely dynamic.
Definitely.
Jumping
Yeah.
from subject to subject. So it'd be very interesting to sit through that.
I recently went to the Ryder Cup and I thought it would be fun to like switch spots with a golfer. Then you realize like the amount of eyeballs on you just hitting that one shot would be pretty nerve wracking. So that could be interesting too.
That is very interesting. Kind of like a pitcher, right?
Definitely very much like that. Yeah.
Okay, what's a social situation that you used to dread, but now you actually enjoy, and what changed?
I would say it's probably public speaking. I think, most people kind of dread that, I think. And for me, I now I really enjoy it. One of my favorite days of the year, a couple days, is our sales kickoff. And I look back at my early days, I shared Merrill Lynch and even the early Oracle days where I just hadn't had opportunities to do that. And I would have thought of myself as less confident or the ability to stand in front of an audience of 500 people and, do sort of MC and run of show and do state of the businesses and all those things. That would have been high pressure for me. And now I feel like that's my moment. I love it. It's my chance to connect with our team and our people and share what we've done and celebrate the successes, and then sort of put a bow on that and talk about the next year and the targets that we're going after and how we're going to do it and the resources we have behind it. I kind of thrive in that stuff now. If you asked me that 20 years ago, I'd be like, there's no way I would do that, and now I love it. It's one of the things I really enjoy about the job.
That is amazing. I think it's that thing when you walk in, you might be really nervous about it because you're like, did I miss something? Is there something, some magical thing I need to say? And then the minute you start to connect with people and you start to look in their eyes and you feel that connection with them. That's when things change.
So to me, I'm so glad you said that. It's very much to me like when I was in the bullpen warming up to start a game. The 15, 20 minutes before is very much like before you're going out on stage to kick off an event like that. And you have a little bit of the rehearsal going on in your head and thinking about the message you want to, communicate. There's a little bit of anxious energy. There's a little bit of butterflies. There's a little bit of keep the chip on your shoulder we talked about. And then all of a sudden game starts and you throw the first pitch and you go, or lights go on the stage and you take over the microphone and you start your messaging. And then you have that connection of channel focus. It's, when I was pitching, it was laser focus on the catcher and getting that hitter out. And you get on stage and it's okay, I don't even need the slides. I know my message. I know what I'm talking about. And you're just, because you're prepared and all the practice you put in to make it feel like it's natural in what you do. And so there's so many similarities to all these things that come together.
It is amazing. Jeff, how about this one? What's something you're embarrassingly competitive about that doesn't matter at all?
I don't know. I'm pretty competitive. I think about everything. I'm playing golf this weekend with about 30 dads from my kids' schools that we've been friends with for, better part of 15, 20 years. And there's two teams set up and it's my team, I want my team to win, and does it really matter? No, because we're all going to go have a great time. And it's going to be how's this kid doing? Tell me about, many of them started college now. So does it matter? No, but it's later that night when we're at the dinner together, we want to be on the winning team,
That's right.
Again,
you want to give the other guy a lot of crap for.
Of course. Yeah, exactly. Yeah. So I think, it's those type of things you learn along the way. Some of us are just wired that way. And, I actually think a lot of people that have maybe met me that didn't know a lot about me. I think a lot of people at Carta early on thought I was a bit more quiet, maybe a bit less competitive. But then once they got to know me, they realized you don't always have to be the loudest, most outgoing competitive person. You can have the inner fire, the chip on the shoulders, I'm going to fight like hell to win every single interaction that we have. And some people are just made that way and others are not.
Yeah, I think you totally nailed it. It's not the one that's necessarily so outwardly boisterous or so outwardly competitive. There are folks that are quiet that are just ridiculously intense. It's not until you get into business for a while. I think even in sales, there's that thinking that a salesperson needs to be a certain way, and I find that's just not the case.
And the thing I think I've learned along the way too is the best of the sales leaders, I think, are the ones that or just people leaders are the ones that can find the balance in that, right? You have the competitive, whether it's louder or it's the more internal one, but then how do you balance that with being genuine and compassionate and driving and having to give the difficult feedback or giving the rah feedback? And how do you balance that with all the individuals that you work with, or even your peers and counterparts and business counterparts that you work with?
Yeah, you see this in coaching of any sport, right? You see it right in front of you. Some people are just out there and they win, and some people are super quiet and they win, and vice versa. So it's really interesting. So do you have a favorite life motto that you come back to and share with friends, work or life?
So I grew up in, private Catholic grammar schools and high school. That's how, with Tom, I've always just tried to operate by the golden rule, do unto others as thou would like to have done to you. And I feel that's how I've tried to live and operate. And it also resonates, I think, very well in the business world. Like, doesn't mean like you have to always agree with everyone. Doesn't mean like you're always in friction with everyone, but you do treat people like respectfully. You give people an opportunity to share their perspective and their minds. And if you treat people fairly and respectfully, I think you gain the respect from them along the way that earns you the right to like ask them to go the extra mile for you as well. And so to me, it's like, yeah, we're selling software and some services here, but like I'm in the people business now, like, and have been for decades now. And it's like, how do you work with people, whether they're customers or prospects or your internal team?
You have investors, you have board members. Yeah,
All
it's
of
like,
it, yeah. And
yeah.
so it's like, how do you communicate with people? How do you treat people so that they want to be part of what you're doing and building, and they feel like, I the other motto I use is like, does everyone have an oar on the boat, and is everyone paddling their oar? Not just paddling it, like, but paddling in sequence together. So we're steadying the boat in the same direction.
It's all about alignment. Yeah. What's your personal moonshot?
Well, right now it's Carta. I've never thought about it that way. I really haven't. Maybe I should, but I just think about it as someone that kind of grew up in a modest world, and I was fortunate to have a great family around me and sort of had the things that I needed and the support that I needed. I try and like pay that back as best I possibly can. And, my hope is that like good things happen to good people. And so I've tried to do right by people in my other stops along my career, and hopefully made a bigger impact in doing that at Carta, and hopefully Carta becomes a really big thing. And then that provides some opportunities to figure out what the next thing is to do to make an even bigger impact. And whether that's in like a similar role or a different type of role, but what we can do to like continue to give back and help. Like, I'm wired that way. Like, I'll spare you the names, but I can give you the names of people along each of the stops of the way that gave me an opportunity to do things that I probably didn't deserve at the time, or had an opportunity to open a door here or there. In a lot of ways, the things I get to do now and will get to do a lot more of in the future is to pay that back by creating opportunities for other people as well.
I think that's one of the most amazing parts about hitting a certain level of seniority in your role is that you're actually paid to give back. You're actually paid to coach people, to lift them up, help them be successful. It's a wonderful system.
Yeah, like one of the most satisfying things I have now is just seeing people, people that I started at Carta with that were in entry level roles at the time and now are like leading large organizations and have a major, major impact on the current and future of the company. How rewarding is that to watch the progression that happens? And then that's the business side. You also get to see these people get married, have kids, like have other adversity in life, and you deal with all those things together. And so for the amount of time and effort that we give to the workplace and what we do together, you also can't help but like become connected to people and understand that like there's more to all of it than just like the work aspect to it.
Well, Jeff, that's an amazing perspective. Thank you so much for spending your time with me today and sharing with our listeners your experience and what you guys have accomplished at Carta and many stops along the way. It was so much fun to learn about you and your life and really what builds great success and what builds great growth. There's always challenges, but there's that way of getting through it. And I appreciate your time today for that.
Rajiv, thank you so much for having me. I had a great time with you as well. Really enjoyed it and appreciate you having me on the show.
That was a really great episode. You have a proven winner like Jeff who is walking through this really amazing background where life came full circle to him, from delivering stock certificates to delivering options electronically and everything in between. I think what Jeff has smartly done in his life is focus on network-oriented businesses and put himself out there in tough situations, but he's also patient in how he gets to where he is. A lot of what he does comes out of his experience playing sports and being a pitcher, being on the mound, having everyone watching you, delivering in key moments, but also knowing that once that ball leaves his hand, that's when anything can happen. And it is really about the team, and it's about the next pitch, and it's about how you adjust. And you can sense that he's in a company with many different business lines, but coming from a core capability that now keeps expanding. And I appreciate his insight about his CEO and what situations work, his drive about what got him into technology, and what he thinks about when it comes to leadership. And you can sense that humility, that sense of purpose, that drive, and that care for the people on his team, his peers, as well as all the people around him. So it was a really amazing episode, at least for me. I learned a lot. So I hope you did as well. So thanks for listening. If you enjoyed this pod, please take a moment to rate it and comment. You can find us on Apple, Spotify, and YouTube, and everywhere podcasts can be found. This show is produced by Anand Shah and edited by Laura Ballant. They do a fantastic job at this. I'm your host, Rajiv Parikh from Position Squared. We're a leading growth marketing company based in Silicon Valley. Come visit us at position2.com. This has been an F and Funny production, and we'll catch you next time. And remember, folks, be ever curious.